Hi there, Emmanuel here. Today we're going to be talking about Forex trading for beginners. And I'm especially going to talk about Forex trading for beginners in 2022. Because I've found in this year, so many people are interested in getting involved in this. So many people have decided that whatever job they're doing is not for them and they want to now take a slice out of the Forex market. And that's because it's $1 trillion industry. And all you need is a small slice of that in order to do whatever you want, whether you just want to take a little bit out or whether you want to take, tons and tons of it out enough to change your life. It's either way is doable once you learn these kind of beginning things and you learn how to get good at it. Now, when we talk about Forex is very different to, say, the stock markets. The Forex market is the most hugely traded market out there. Stock markets, they're traded in the billions sort of thing, in different countries. They're traded roughly in the billions. The Forex, there is $5 trillion per day is traded in the Forex market. In fact, it's gone up. It's $6+ trillion per day traded in the Forex market. And the difference is the stock market is, it's when you pick a stock, you like a company, you buy into the company and you trade it. And usually the stock market's open at certain times. In the UK, it's from 8 a.m. GMT to 4 p.m. Yeah. And then it closes. Whereas the Forex market is open 24 hours a day. You can trade it at all different times. They have different time zones. You have the UK time zone, you have the US time zone, and then you have the crossover of the two. And you also then have the Asian time zone and then the Australian time zone. So you can see it's all around the clock. You can trade the Forex and actually earn from learning the Forex. Now, what do we mean by Forex? Forex really is currencies. It's like basically you're just trading one currency against the next currency. You've probably already done similar things like this, not without actually trading on the chart. Like this picture here on the Bureau de Change. Say, for example, you went to France and you took $100. So you went to the bureau and they said to you, right, for every dollar, the euro is now worth 1.3. So for every dollar, you get 1.3 euros. So you exchange your $100 and you get a set amount of euros. So then say I came now the next day and I had the same $100, but now the price of euro has gone up. So say it's now 1.8. So I'm actually now going to make more euros than you did just the day before because the actual price of euro has moved. And that's basically what trading is. Do you know what I mean? You're exchanging your dollar for your euro. Obviously, the Bureau de Change take their commission out of it, which on the charts is what we call spread, because all brokers, they've got to take, for doing the transaction, they're going to take their commission. Bureau de Change do the same. But what you're hoping, if you're saying you want the price to go up, say the euro to go up, then you're going to watch the price and hope that the price goes up because you're going to make more money as the price goes up. It shows a little bit on the charts here. You're hoping the price of the dollar is here, price of the euro is here compared to the dollar, and you're hoping that it goes up so that you'll get more money. You actually make more money as the price moves up. I'm going to go through that completely again when we get onto the charts. But that's roughly what you're doing when you're exchanging currencies. You're exchanging you're trading one currency off another currency. Now, the main currencies that we trade are the US dollar, the Great British pound, the Japanese yen, the euro dollar, the Australian dollar, the New Zealand dollar, the Swiss dollar, and then the Canadian dollar. Those are the main ones, and combinations of those. There's 34 different combinations of those. So say like, I don't know, the euro against the pound or the dollar against the Swissy. Those are the main ones. And then we have what we call major pairs. And the major pairs, which is what we advise people to actually trade. And when I say we, I'm going to give you access in a minute to a group that I actually trade with. 5, 6, 7-figure earners are going to show you a strategy that they're using to earn on the Forex. Yeah, and they're going to do that for free. You're going to come and have free training if that's for you, but I'll go into more detail into that in a second. So, like I was saying, yeah, the major ones are US dollar because that's the biggest currency. Anything paired against the US dollar is called a major. So we have the US dollar pound, the euro dollar, the US dollar JPN, all the major ones. These are what we call majors. And that's why we advise you to use majors, because there's more liquidity, there's more money in it, there's more volume, more people are trading it, so it moves quicker. So you get to the places you want to go to quicker on the charts. Do you know? And the spreads, the commission costs are a lot lower because they're liquid. A lot of people are trading them. When you're trading the other currencies, not quite as well known, like, I don't know, the Zimbabwean rand or something like that, then these are called miners. And they move a bit less predictably, and the spreads, the commission to trade them is a lot higher. So you should really, especially if you're a beginner, you should really trade the most traded currency pairs, the 34 most traded, or at least trade the majors. You know, trade the majors, the US dollar based ones. Okay, so what we mean by sort of trade is we're pitting one currency against another. That's in Forex. So we're always putting, say in this one, this is euro dollar. So we're trading the euro against the dollar. So say, for example, the price was here. Let's say here, this is 1.117, just here. So what that means, for every 1 euro, you're going to get $1.117. So if you're buying it, you're hoping then if price goes up to say here, so now for every 1 euro, you're now going to get 1.146. Yeah, so you're wanting it to go up because you make money as it goes up, if that's what you're predicting. If it goes down, then you make money, and you're selling it, so you want it to go down, you make money as the currency goes down. So we're always looking at the first currency, we call the base currency, against whatever you're trading it against. So this would be euro against the dollar, yeah? And if you want it to go up, we're doing what we call buy it. We want in price to go up, the price of the euro in relation to the dollar. And if we want it to go down, then we're selling it to go down. So, you know, this is what we mean by buy and sell, if you hear those terms on the chart. So I want to go for a few things that, you know, that you're going to be taught as a beginner trader. And we actually also have a course that's going to go through all of that. Yeah. And if you join us, you get this as well for free. And I'm going to go through all of the stuff you're going to get in a second, but I'm just going to show you some of the basics, some of the terms that you're going to hear all the time when you come onto trading and you come onto charts. The first thing is going to be what they call trend. Trend just means the way that price is moving. Yeah. So for example, say this blue line here. Price is moving up. So that's called an uptrend. Yeah, so that means it's got a higher low and higher highs, higher lows, higher high, higher low, higher high. So generally the price is on this way up. Yeah. So, you know, if you're good and you buy it down here, you're making money as the price goes up. Then the trend changes here, and you can see now it starts to go down. This is now called a downtrend. Yeah. So this is lower highs and lower lows, lower high, lower lows, lower high, lower lows. And you can see generally the price is on the way down. Other things you're going to hear is things like support and resistance. What do they mean by that? By support and resistance. So support basically, it's almost like an imaginary line that you draw on the chart that price doesn't seem to be able to get through. They call it the floor. So you see here, this is bouncing here, then goes up and it comes and it bounces again and it bounces. It just seems that it can't break this line. This is called a support line. And then the opposite is the ceiling or the resistance. Again, here, you see this line doesn't seem to be able to break, comes, touches, goes down, comes back again, touches, drops again, comes again, touches and drops again. Yeah, so that's called support and resistance. And there's other little terms. These are chart patterns that you're going to see on the charts. And different people trade in different ways. Yeah, some people do trade these patterns, yeah, and they're called technical analysis, technical traders. You know, they trade these types of patterns. They look for things like double tops. I hope you can see this, it's a bit blurred. Head and shoulders, double tops, flags, pennants, what we call continuation patterns, and you see them all over the charts. You know what I mean? And that's what they trade off. But in essence, the market only really moves three ways. You're either in an uptrend, so you see prices moving generally upwards, like I was talking about, or you're in a downtrend, the market's moving downwards, and that's when you should really try and trade, is when there's movement, either up or down, or you're doing what we call consolidating. This blue box here, you're just going sideways. And even within that, let me just go to the 1 hour. Even within that sideways motion, there's support and resistance within that. Yeah. So support, come in, support, support, you know, and then the top resistance, resistance, resistance. Yeah. So those are the three kind of ways that we trade. Yeah. So different types of traders. Like I said, those that trade, when are you even going to take a trade? Yeah. When you go, it depends what type of trader you are. If you are a technical trader, then you're looking for things like this trend line. You're looking for bounces off the trend line so that when the price comes and touches the trend line, the resistance line, you're going to sell it. Or if you're trading off a trend line and it comes and it touches the trend line, you're going to do whatever. You're going to buy or you're going to sell it. So you're looking for the patterns that we were just talking about on the chart and you're trading the patterns. Or there's those that we call fundamental traders. They're trading news events. Things like that. So for example, if they look at the euro, maybe the interest rates. So if the interest rates of the euro is falling, then you're expecting price to start to drop. You know, because, you know, the interest is coming down. The interest rate's coming down. Or maybe something's happening in the world. You know, maybe there's a war, you know, or there's a pandemic, or things are happening that you're expecting negative news. So when you have negative news in general, not always, the price tends to fall. So those are the types of people who are listening and watching for news. Or you do get a combination sometimes of both, where you get some people who trade technical and fundamental. Right, so this is the chart. And I want to show you the things that we're looking for on this chart. For example, why are they different colors? This is what we call candlesticks. I'll show you the different charts that you can look at. But this is a candle here, this green one here. So at the bottom here is when the market on this chart, on this candle, market opened there, the price opened there, and it closed there. So it went up, which is why it's green. Yeah, so what we call a bullish candle. Started there, closed there, price went upwards, so it's green. If the price had gone the other way, had gone down, say this candle here, so at the top of the candle, price opened, at the bottom of the candle, price closed, it's gone down, it's a bearish candle. So bullish is going up, green, bearish is going down, red, and you can change the colors to whatever color you want. But this is called candlesticks. We've also got bars. These are bar charts, where I don't like these. I prefer candles. These are, for me, are very hard to see. Or there's line charts. Some people like to trade line charts. Line charts are okay. They're easy to see support and resistance lines. But, you know, the people that I trade with and myself, prefer to trade with candlesticks. So those are the different types of ways to trade, do you know? And then you think to yourself, right, okay, so how do I put a trade on? To put the trade on, you use something called a broker. Yeah, and there's so many different types of brokers. Again, I'm going to go through the course that you're going to get that's going to show you all of this. Yeah, but in essence, the broker is like the Bureau de Change that we were talking about earlier. They allow you to use their platforms, like something called MT4 or MT5, to trade with, and they take a commission every time you take the trade. So they make money either way, you know, whether you're buying or you're selling, they make a little commission. So say you wanted to get into this trade now, there's different ways that you can get into the trade. You can either do it a live market execution. So say I was here and I saw the price go and I wanted to just sell it. I would just press a button here, sell button. I would be in the market live and I'd be in a sell. And I'd put in what we call a stop loss. So say there's a certain place, say up here, I would think if the price didn't go down and it turned around and came up, there's only a certain amount I want to lose before I lose my money. Yeah, I just close out and I lose my money. But so that's live execution. You can either buy or sell live. Or there's something we call a pending order. So this is like this box here. Say I'm looking at this price here and I'm thinking, right, price is going to come up to about there. When it gets to there, it's going to trigger and it's going to drop again and fall. So I put an order in here, which you can do straight away. You just put a pending order in, what we call a pending order. You'd put a stop loss in here. And always advise you to use a stop loss as a beginner because, you know, you don't want to, it might not go the way you thought it was going to. So even if it does and it goes against you, you're only going to lose that much. But if it triggers and goes down, then, and it gets down to the end here, this is what we call your take profit. So that's the amount of profit you're going to make. So that's the amount you're going to lose if it goes against you, or this is the amount you're going to make if it goes in your direction. And you can set that up. It's called a pending trade. Okay, so, and now I want to show you the course. So if you do join us, you get this course here for free, which goes through all of this basics, because there's loads more. I'm just telling you the kind of basics that you need for a beginner, but there's loads more stuff. There's what we call liquidity. There's what we call leverage. There's what we call spreads, pips, lot sizes, and that's all gone through in this course here. Here it goes through. I'll just walk you through the main bits. What is Forex? So it breaks it all down. The history of Forex. What is traded in Forex? Market participants. Broker versus trading platform. Yeah, what I was just showing you a minute ago was the trading platform, and I was talking to you about brokers. They go through all of that in there. Trading view. The when to trade Forex. The times to trade it as well. The buy versus the sell. What we were just talking about as well. What is a pip? Goes through all of that. Lot sizes, what are pending orders, what we've just discussed, the bid versus the ask, the margin and leverage, the types of analysis, 3 types of analysis. The couple I spoke about, fundamentals and technical analysis as well, and then time zones, the best times to trade. And that's just the beginning of the course. Do you know what I mean? The best times to trade. Me personally, I trade in what we call the crossover. That's 1 p.m. GMT. And the crossover from the UK Open to the US Open, there's a crossover, and that's when there's the most volatility, there's the most movement, and that's a nice time to trade. I prefer that. Some prefer different times, but they talk about all the different time zones that you can trade in as well. And then finally, I'll talk to you about the different types of traders. There's 4 different types of traders. The first is what we call scalpers. So basically, all that means is that they like to get in quickly and make pips very fast, 10, 20 pips, and then get out. Yeah, so like live execution a lot of the times. You're sat on the charts, you're looking for something, you think, yep, this is what I want. I don't know, let's say a bounce off this trend line here, and then you think, right, I'm going to go for it and buy it, and then you take your 20 points or whatever it is, 20, 30 points, and then you get out. Yeah, or we have day traders. They tend to get in, maybe hold the trade for the day, usually only 1 day, 2 the most, and then they get out. Do you know? Then we have what I'll call myself a swing trader. People that get in and hold trades up to 7 days, maybe even up to 14 days. So they might get in at the top here and just hold it. And maybe hold it to say somewhere there or whatever. Do you know what I mean? But they hold trades longer. And then we have the position traders. They usually trade higher time frames like the daily or the weekly. And these are people that kind of get in at a point and then they just hold it for months. A lot of the time they just let it run down to where they think it's going to go, and they just move and their stop loss on the way down, so they just trap in profits as it goes in their direction. But those are position traders. Those are people that, there's different types. You don't have to always sit on the market if you're a swing trader or if you're a position trader. So that's really the main things you need to know. That's the kind of basics of trading. But one of the most important things, I think, and I'm going to end it with this, is the mindset. What a lot of beginner traders do, they get so emotionally involved in trades. They forget that you do have losers. And if anybody tells you that they're going to show you a system or something that doesn't have a loser, I would run a mile. You lose in trading. I don't care how good you are. People lose. But here's the difference between the winners and the losers. You have a big, what we call risk to reward. So if you're going to lose and you're going to lose this much, but every time you win this much, then you can afford to lose more than you win. Because when you win, you're going to make it all back. And another thing is that you don't want to get married to any one trade. This is again what beginners do. They get so emotionally involved in a trade that it becomes really difficult for them to trade, because if they're winning a trade, they're like, yes, I'm winning. I'm going to pay my mortgage this month. I'm going to buy that new Lamborghini, whatever. Do you know what I mean? They're just so emotional, and they're trapped on the trade or on their phones every second, looking at every little move, every tiny little move of a pip. It's very emotionally draining. And the reverse, even if you're losing, it's even worse. You're like, oh my God, I'm losing. All my money's going down the drain. What am I doing? I don't know what I'm doing, and all this sort of stuff. And what we advise is trade in probabilities. Trade in a block. Trade in a block of 25 trades. And then at the end of the 25 trades, then analyze how much, whether you're winning or you're losing. And then you can tweak things, you know. You can't do it every single trade. You have to trade in a block. And we advise a block of 25 trades. That way you're not as emotionally involved. Because if you have a few losers, you think, okay, fine. The 25 trade block is not finished. You have a few winners, you think the same thing. Fine. The 25 trade block hasn't finished yet. Do you know? So it helps you with your mindset. And lastly, if you're a complete beginner, I wouldn't be trading live money. I would trade every broker that gives you MT4. Also, you can do a demo account with it. So you can trade as if it was live money. You can trade the charts as if it was live. You can buy and sell and everything, but it's not real money. So it will just help you with your emotional side and with your mindset, which is one of the biggest part. The biggest part for newbie traders, beginner traders, they don't get their mindset right. So it's just an emotionally draining experience when they come to trade. Okay, listen, I hope you got some value from this. As I said earlier, I'm going to give you access to come and trade with us. For next week, it's going to start Monday, 12 p.m. Eastern Standard Time. And you can come and trade with us completely for free. Yes, it will start Monday, 12 p.m., which is 5 p.m. GMT. And you get on the charts, you see what we trade, you see the leaders they will tell you exactly what we trade, they'll tell you the things we look out for, and you can ask questions, all of this sort of stuff, you know, you can ask beginner questions, and everybody there's just to try and help and encourage you, you know. So if you think that's for you, and you want to get more information from me, then I'm going to leave a link below this. All you need to do is click on that, and then you'll get completely free access to the next training, which starts Monday, 12 p.m. Eastern Standard Time. By the way, listen, I do hope you enjoyed this. I'm going to do a 10-part course that I'm going to give you access to as well. If you're interested, it'll be below on this video here. And I'd love to know your comments. I mean, I hope this helped. Was there any part that you wanted to know more about? Do you know? And if you did get value from this, then please just consider subscribing. The subscribe button will be below. Just click on that and tick on the bell icon so you won't miss out on any of the videos that I'll be putting out regularly. Well, once again, thanks for listening. Till next time, you have a great day and you take care. And I'll speak to you soon. All the best. Take care.